Our next subject is to identify and prepare basic financial statements. Essentially, there are four financial statements which include income statement, balance sheet, statement of cash flows, and a statement of owner's equity. And we also will explain how they intercorrelate with each other. So here are the table of these financial statements and their definitions. For income statement, it basically describes a company's revenues and expenses along with resulting net income and loss over a period due to earning activities. So the key part here is revenue minus expenses, and another key part is over a period of time. It could be over a quarter, it could be over a year. And you also have a statement owner's equity. The net income or loss you get from the income statement will go to owner's equity because the net income belongs to the owners. And this financial statement explains the changes in equity from net income and from any owner investments and withdrawals. And once again, this statement of equity is for a period of time. And this could be a 3-month period for a quarter. It could be a 12-month period for a year. The third financial statement is balance sheet. It describes a company's financial position like a type of assets, liabilities, and equity. And the key point here is it has a snapshot of a time. So it has a one certain time of a year. It could be December the 31st of the year. It could be January the 1st of a year. So at any given date. So this is not for over a long time period. Number 4, statement of cash flows identifies cash flows in and cash flows out over a period of time. It could be on a quarterly basis or on an annual basis. So for the first, second, and the fourth statements, these are all recording the activities and the cash flows and accounting items over a given period of time. But for balance sheet, it records the numbers for any particular time of the year. For example, if you look at revenue for a period of time, let's say for a year, during the whole year, the company makes $12 revenue. And this $12 is $1 in January, $1 in February, $1 in March, so on and so forth. This is for over a year. But if you look at the balance sheet, the total assets is $10. And this $10 is at December the 31st of the year. And just that date, the balance sheet shows the assets is $10. So that's essentially different. So right here, you have a income statement which records revenues of different sources. You have consulting revenues, rental revenues, and the total revenues, which we practiced before in the exercise of an earlier chapter. And then we also have expenses, which include rent expenses, salary expenses. And when you use the total revenue minus the expenses, 6,100 minus 1,700, you would get 4,400 for net income. And this net income belongs to shareholders, the owners of the company. And then you gotta move the net income all the way down to the statement of owner's equity. And right here, you have an investment by owner, and that's basically the owner's share of the company, 30,000. And when this much money is made, that goes to owner's pocket. And this together will give you a 34,400 owner's equity. And then the owner decided to withdraw some of the money and spend it. So the owner withdrew $200. So on the company's balance sheet, the money would disappear by 200. So you will see this is the change. And after you get the total equity for the shareholders, you will move it from the statement of owner's equity all the way down to balance sheet. You see right here is called balance sheet. And on the balance sheet, you have a total equity, and you also have a total liabilities. And it's a simple case, your total liability is just account payable. And also you have total assets, which are cash, supplies, and equipment, and they all add up to this number of 40,400 for total assets. And this number is exactly the same as total liabilities and equity of 40,400. All right, and then based on the balance sheet, you can develop a statement of cash flows. So basically, your cash changed from a zero when you start the company from scratch. You have a zero cash at the beginning, and now cash increased to $4,800. Well, cash is the most liquid and important asset in business, so that deserves we make a one separate specific statement just for cash flows only. So you will see that the net change of cash is 4,800 positive, and that's gonna make your ending cash balance to 4,800. And then if you look at all the other activities, you will see cash received from clients, paid for expenses. So basically, this is the revenue and this is the expenses. So you use the revenue of 6,100 minus expense of 5,100, you will get 1,000 net income. And net income, which derived from revenue and expenses, is an operating activities. Okay, and right here you have a purchase of equipment, and equipment is for long term and it's a fixed assets, so that's for investing activities. And also you have financing activities. For example, the owner contribute $30,000 to the business, and also the owner withdraw $200 from the business, and altogether these financial activities would leave 29,800 cash to the company. If you combine all these three types of activities, operating, investing, and financing, then your overall cash is 4,800, which is a total of these three numbers. And here is an example. Well, you can do it by yourself. So right here, you have companies' account payable, other liabilities, cost of sales, cash, owner's equity, and withdrawals, and investment and other assets, land and equipment, and selling the general and other expenses. And you also have account receivable, net income, so on and so forth. All right, so under the income statement, you will record the revenues, and then you record the expenses. And after you deduct expenses from revenues, you would have a net income. And if the number is negative, it will be called net loss. After you get net income, then you will put net income into a statement of owner's equity. And in owner's equity, you have owner's investment is right here. And you also have owner's withdrawals, which will be subtracted. And then you add net income to there, you will have an ending capital. After you get this ending capital, you have the total equity on the balance sheet. And then you move this total equity on the balance sheet together with liabilities, and that would be equal to total assets. Once again, in the most fundamental accounting equation, total assets equals to total liabilities and equity. So what would belong to liabilities, like this accounts payable, these other liabilities would belong to it. And what belongs to total assets, like your cash, definitely is a total is assets, and also investment and other assets, land and equipment, accounts receivable, and these are all total assets. All right, so this is basically the financial statement we get from Apple company. All right, and we know that Apple is the largest company in the world. It's a market capitalization equal to the entire Russian market. So right here, if you generate income statement, the first thing you do is to start with the revenue. All right, and then the second is to deduct expenses, and the expenses basically is cost of sales. And the revenue could go to several places. It can also go to the statement of owner's equity. The thing is, for the owner's equity, you also need to get the owner's own capital, this number, $111 billion. And you also need to incorporate withdrawals by owners. And for the balance sheet, you have a cash is being put in there. And for the liabilities, you have account payables and other payables. So each of the items on this side have their places in the financial statements. And then for investment and other assets, this would go to total assets. Land equipment would go to total assets. Selling, general, and other expenses, this would go to income statement as it is kind of an expense. Account receivable would go to assets. And the net income basically is your revenue minus all the expenses, and it will be the ending number here. It will also go to statement of owner's equity on this side. All right, so the net income just moved to the statement of owner's equity. And then you have the total equity of the firm. You're gonna move the total equity, which is the summation of the three numbers, 1, 2, 3, and then you move all the way down to the balance sheet. And basically, we're done with these three financial statements. So for the income statement, you have a revenue right here, put it down there. You have a cost right here, put it down there. You have another expense, 40,000, put it down here. After you get net income, you combine net income with the owner's capital, and then with owner's withdrawal, and then you will get the ending period capital, which is 1119,000. So this 1119,000 is a summation with the three numbers. And then you're gonna use that 119,000 as a total equity. And then the total equity together with total liabilities will be equal to total assets. All right, and they both equals to 290,479. And you can do your own calculation there to verify the answers. And I will use Excel to show you how to do it. All right, so this is how we do things in Excel. And Excel is a very important tool for us to record the accounting numbers and consolidate them and make sure they are intercorrelated. So right here I have screen cut the numbers of the exercise I just covered. So the first one we should produce is an income statement. Okay, so let me just write the name income statement. And then we have revenue on the top, and we also need to deduct the expenses. So the revenue being mentioned here is 233,715, and the expenses actually include two parts. The first is a variable cost or cost of sales, and this item increase as the unit production increase. So that's 140089. Okay, and the next one is selling and general expenses or SGA expense. So let me just say SGA expense. All right, and that equals to 40,232. All right, and the other one, just to say cost of sales. All right, so now I can get my net income, and this net income would be my revenue minus the cost of sales minus SGA expenses. Just click on these cells and connect them with the equal sign and minus sign. All right, so that's my net income, and my net income is also provided here. There's a good verification to say that what I did here is right. And now let me do statement of owner equity. Okay, so you should have a owner's capital. In this case, that's 11157. So these are all in millions of dollars. And remember, this is a real data for a company called Apple. Well, if you use iPhones or iPad or Mac, you know what that company is. Then withdrawals, okay, withdrawals would be 45586. All right, and then your net income would be put it as a part of it. So I just borrow the number from above. Okay, so my total equity here, that would be equals to owner's capital minus withdrawal plus net income. So that's my total equity, 119,355. So what I did here is right. And then I do balance sheet. And for total assets, let me just pay attention to all of them. Starting from here, there's no assets. Oh, here, cash is assets. So cash is an assets. So that is 21,120. That's something I can hold on to. So that's assets. And also I have an investment and other assets. So that is 230,039. All right, and I have a land and equipment. So this is also an assets, 224,741. All right, and I have another assets here actually, which is called account receivable. And this is 16849. All right, so now I can get my total assets, which is a summation of these four numbers. So let me just put a borderline there. So this is the sum. SUM stands for summation, parentheses, then I just circle all of them. That's my total assets. And if I look at my other side, so let's see what about my liabilities. Well, I have accounts payable and other liabilities. So they are all at a significant amount. This is 35490, and other liability is 135634. All right, and this will give me my total liabilities. All right, so my total liabilities here would be the sum of the two. So I can use this one added by this one. Add a borderline there. Okay, and then I need to add my owner's equity. So the total equity, I just directly borrow from the statement above. Right. Borderline, and then my total liabilities and equity. Let me just add these two numbers. As you can see, these both numbers match each other. So now my financial statement is complete. I still need some more data for statement of cash flows, but now I have only information for a year, so it's really not possible for me to make a comparative study and generate the statement of cash flows. So far, it's the best I can do.